Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today I'm going to go over Robinhood Gold, some of the benefits of it. So it does offer some really nice benefits, but that charge, and we're going to go over what kind of a return you would need to basically, you're going to be borrowing money, you're being trading on a margin. I've seen a lot of investors out there wondering if it's good to trade on a margin, and it could be good for you, it could be bad for you. So introducing Robinhood Gold, it allows you 2 times the buying power, extended trading hours. So this is a really nice perk. Instant access to funds, so if you're depositing money in, you're going to have instant access to it. So let's go ahead and click get started. We can see that we have 3 different tiers here. There may be more later on depending on how much money you currently have invested. I'm going to see once the rest of mine adds in here, we'll see if there's any more in here. But right now I have 3 tiers. I have 2,000 extra buying power, 8,000 extra buying power, 12,000 extra buying power, and you can see the prices here on the right. So we have they're $10, $40, and $50. But the first month is free. So if you're brand new to Robinhood, you are wanting to, dump your money into Robinhood, you might activate the 1 month free to begin trading with a large amount of money, and they're not going to charge you that first month. So while you're waiting for your cash to deposit into Robinhood, you can actually activate Robinhood Gold and begin trading. Such as today, you saw that the market was actually really down today. If we go look at my portfolio, I went down about 0.28%, so not a big loss today compared to the Dow and S&P. I'm not sure what their actual percentages are. I guess I could look here 1 second. Okay, so up at the top I can see that the Dow went down 0.25%, so I lost a little bit more than the Dow. S&P went up 0.06 and the Nasdaq went up 0.47%. So overall, actually pretty decent day in the market. My portfolio with AT&T, ADP, AbbVie Inc., and ExxonMobil, they decreased just a little bit today, but not enough to really hurt anything. It's okay. I'm in it for the long term, and this 0.28% is really nothing for the return that I'm getting on the dividend, and that just allows my dividend payback to just buy more shares. So let's go ahead and get back into Robinhood Gold. I don't know why it recenters there, but okay, so let's learn more information. Of course, it recenters once again. So Robinhood Gold, the main thing that I wanted to see with this is what kind of extended hours it allowed me to trade. So right now I live on the West Coast, so my trading hours are 6:30 a.m. and 1 p.m. This would allow me 30 minutes of earlier trading, so basically 6 a.m., which I'm not too interested in getting up at 6 a.m. I'm not a day trader. I buy at a discount on a lot of days where it's actually pretty negative, and I can get a good price. But the after hours continues for 2 additional hours. Now, normally closes at 1 p.m., so right after lunchtime. This would give me until 3 p.m. So that's actually pretty beneficial. I could, when would it be useful? There are 2 common uses for extended hours, and that's when companies are going to be announcing their quarterly earnings. So I know AbbVie is coming up, and I think AT&T may be coming up. I know there's a bunch of stocks that are currently coming up to announce their quarterly earnings. So got some foreign markets. I don't trade outside the markets. I mainly stay with the USA stocks, and there's no different rules for trading on extended hours. So the main thing is the doubling your buying power. So another question that I had here was this one: do I get charged interest on top of my monthly charge for using gold buying power? And the answer is no. You will not get charged any interest or fees in addition to the fixed monthly charge of the tier you select. So it's a flat rate. So that was basically all the really important information they gave, like a nice example down here. No more waiting 3 days. You can just begin investing immediately. And yes, you can reinvest with your returns. So with Robinhood Gold, you can get instant reinvesting, which means you can proceed with selling shares and buy something else. So you don't have to wait those 2 or 3 days for once you sell something to rebuy something else. And actually it looks like the instant deposit feature, oh wait, here it is. Actually it does lie. So on the other hand, if you deposit, the full amount becomes available immediately. This limits help prevent fraudulent behavior. So you can increase your instant deposit amount by switching to Robinhood Gold. So I'm currently waiting a couple of days for my full amount to kind of transfer over. I could switch to Robinhood Gold, and that would increase it really quickly. So let's go ahead and get started, and we could take a look at the tiers here now. So whoops, there we go. I could have extra buying power. So let's go ahead and do a breakdown here. So Robinhood breakdown. And see here. So what are some important things we're going to want to know? We're going to need to know what the buying power offers. So buying power. So we're going to go ahead and say 2,000, not 20,000. 2,000. I'm going to leave a space. 8,000 and 12,000. Next important information is monthly charge, and this is 10 and 40 and 50. Now, how much is that a year? So your charge, what the heck did I do here? Oh, I added an extra one. Weird. Delete column. Okay, Y charge. So this is equals B6 times 12. So it's $120 a year, $480 a year, or $600 a year for the $12,000. So what percentage of that? So how much are we paying out? What percentage is how much is the charge per year of the amount that we're able to borrow? So for this, we could do equals C6 divided by A6. And then we could multiply those and then turn these into percentages. Whoops, come on. We'll just hit the whole block, change it to percentage. These are dollar amount just to make it easier on the eyes to kind of see and what it represents. So if you borrow $2,000, you would need to get a return of at least 6%. Now you can do this through investing in a stock that you know that you're pretty positive that it's going to go up at least 6% to pay back that $120. Again, with $8,000, you're going to need a return of at least 6%, and with $12,000, you're going to need a return of 5%. Now, if you're working and you're getting, see, I'm not sure what the current tax rate. I think it's 15%. So with taxes, we could say with taxes. So we can say like an increase of 15%. So with 15% taxes, this is actually, let's see, we want equals C6 times 0.15. So it's actually $18 of taxes per year. So your dividends that you're getting paid back, let's see here. So you have $2,000 invested for 6%. You're going to be getting $120 in a year, but that's $10 a month. And with on taxes on top of it, it's actually going to be $138 that you'll need to make that year. And 72 and 480 is 552. So that is a let's go ahead, and 90 and 600 is $680. So what is the actual return you would need to get back to pay off your taxes and be able to pay off your amount charged? So this is the percent needed with taxes. And we can do this by with taxes. Oh, okay. What percent would we need? So we could actually take equals C6 plus E6. So that is that divided by, actually times 0.06, 0.06, that's not right. let's just do this. I'm going to just add the initial amount plus C6. So this is how much we need with taxes. And now here we can just take equals E6 divided by the power, so A6. And it's actually that amount. And this is all percentages. So to pay off your initially requested buying power of $2,000, you would need a return with taxes of at least 6.9% for 2,000. For 8,000, you would need a return of at least 6.9% to pay off your borrowed money. And for borrowing $12,000, you would need a return of at least 5.75%. So what is the average return per year? So the S&P 500, the average return is 7%. So if you think you can beat 7%, you might be able to, it might be worth it to you. To me, it doesn't look like it's worth it. It's 6%, basically 7% for these returns with the taxes included to be able to pay back that buying power. What if I actually lose money that year? What if, the recession happens and I actually end up losing a chunk of money? Well, this is all paid out of pocket. Then now you lost your money that you traded on the margin, and now you actually have to cough up a lot of your own money to pay back that margin. So overall, I don't like these specific rates. I don't think I did the math wrong, but kind of doing the overview of it, I don't believe. Now it could go even better. Like if you get down into the 20,000 range and it's 5%, and $25,000 range it's 4%, and it's 30,000 and you're at 3.75%, then the yields needed the borrowed money can outweigh the interest or the return needed for that specific amount. Based off this right here, you can see that the return is lower by almost a whole percent if you're borrowing 12,000 versus borrowing 2 or 8. So hopefully I did the math on that right. If you take a look at it and you notice that I may have made a mistake with my math, go ahead and leave that in the comments. But I just really want to do a breakdown for myself and others out there that may have any questions as far as is it worth buying on a margin? What are the monthly charges, yearly charges? What percent would you need return to pay off that yearly charge? And what would that specific interest be? What would it be with taxes included? And what percent return would you need with taxes included? So that is the information. So I want to thank everyone for watching up until this point. If you liked the video, remember to hit that like button, and please remember to subscribe for future financial videos. If you have any questions, please leave a comment and I will always reply. Thanks for tuning in, and I will see you next time. Bye.